Okay, good evening, everyone, and welcome to another episode of Let's Talk with Tammy, brought to you by BKNI Resources. BKNI Resources is the most comprehensive consulting company in working with individual businesses, schools, governments, and organizations. For the past 10 years, they have been conducting seminars, workshops, special programs, individual services, and private consulting relating to physical, social, and psychological and aesthetic aspects of personal appearances and self-presentation. And for those of you who are tuning in for the first time, a little bit about the show. Let's Talk features interesting personalities from all walks of life, sharing bite-sized insights into relevant topics. I'm Tammy, your host, a lecturer by profession, a scientist at heart, and Miss Hari Malaysia 2019. My basis for the show has always been about learning from my guests, and I hope you will do too at the end of each episode. So let's get started. So today we're going to talk about personal finance, and with me this evening is Mr. Linkeshwar. Let me bring him in. Thank you so much for being here tonight.
Thank you. Thanks for having me. Thank you for the opportunity.
Right. So before we start, right, so let's give everyone a bit of a context because when it comes to personal finance, we can talk so many things. We can talk about, retirement plans. We can talk about managing expenses. There's, how to budget. There's so many things. So let's give like everyone a bit of a context first on what are we going to cover today.
Sure.
So I was as I was reading about this topic, right, it was funny to see that there was this study that said that millennials, so by the way, millennials are adults aged between 22 to 38 years old, right? And millennials are overconfident and underprepared when it comes to personal finance. So yeah, we are considered a generation after Generation X, where majority of us have a college degree. We have some sort of a saving account. We are planning for retirement. A small percentage of us actually have started owning a house. But when it comes to emergency funds, we don't have anything. We are not prepared for that. Like let's say suddenly there is a job loss, or there's a sudden illness, or there's an accident. There is no money to spare for that because majority of us do not have enough savings. And a lot of us, sadly, it is less than 10% of us even have high school level financial literacy. So majority of us don't know what is money, how is money, but we do know that, okay, saving is a good habit. We have to save. But I would think that you would say saving is not enough. So why is saving not enough?
So when you look at it, so first of all, whatever that you say, I totally agree. The root cause will be lack of financial literacy, because obviously financial literacy is not taught in our educational system. And if they are fortunate enough, then their parents might have teaching them from young and all that. But most of us,
Correct.
to be frank, we are not exposed to learn financial literacy. So it's up to an individual to take their own initiative and effort to learn financial literacy. So financial literacy, again, personal finance, there's a lot of topics to learn. So that's my thoughts on whatever that you gave the intro. So when it comes to savings part, savings is just a first step. That's what I would say. So there are few steps that you will need to take in order to achieve your financial goals or financial independence, freedom, and all that. So the first step will be to earn money, to make money, right? Because money is out there, you need to find a way to bring it to your pocket. So that's what most of the people will be working in a job, doing business, sales, etc. So that's just the first step to bring money to your pocket. The second thing is that you need to know how to hold on to that. You need to know how to keep it, because if you fail to keep it, it will just be gone in a number of days. Especially those who are living in a city, lifestyle costs and all, lifestyle inflation and so on, gratification and etc. So savings again is just the second step in order to achieve your financial freedom. And the third part will be to multiply that money, to put that money to work. And that's how you can stop trading your time and energy for money. And that's when you reach financial freedom, independence, and so on. So to summarize, a lot of people either stuck at the savings part, as what I've seen, they either stuck on the savings part where they save money, where they fail to save money at first of all. And the second category of people is that they're able to save money and they hold on to a huge lump of cash, and they build emotional attachment to the cash that they have, the savings portion.
They just
So
hoard and keep it together.
they fail to move on to the third part, which is to invest.
Right.
So that's my take.
Okay. So basically, when it comes to savings, it is not enough, number one. And I think we are also going to discuss a bit about how, I mean, if you're thinking about being wealthy, it's not about being comfortable, but being actually wealthy. Financial freedom basically means you do not think twice before spending on anything, right? But majority of us do not have that privilege. So we're going to talk about how we're going to have or achieve that financial freedom. And clearly, saving is not enough. And then a lot of people also don't know I don't think they even understand what it means by good debt and bad debt.
Yeah.
So what's that?
So good debt is basically, what does that mean is that you put your money or you borrow money for a valuable reason.
Right.
Either that value could be related to money, or most of the time it could be you should be making money out of that debt. So for example, I borrow from you 50,000. So it depends on me. What am I using that 50,000 for? What's the purpose? So for example, if I go spend it on a vacation, so that becomes a liability because I'm not making use of that 50,000 in a valuable perspective. So another example, I borrow from you 50,000 and then I go and start a business, or I go invest it, which or in another way, I make a higher return than your borrowing cost. So that becomes a good asset or good debt.
Okay.
So before we move on to explaining what is good debt and bad debt, people need to first understand what is an asset or what is a liability. So an asset is something brings money to your pocket, and a liability is something that takes money out of your pocket. So that's the first thing that a lot of people need to understand, truly need to understand, because that's what will determine where are you putting your money. So if you put your money in a liability, so that becomes a bad debt. And if you put your money into an asset, that becomes a good debt. So that's the quick summary that I can make of.
Okay, so basically buying a car would be a bad debt, right?
Okay, so let me give you an example. So on a daily basis, first of all, a lot of us holding on to cash itself can be a liability or can be a bad debt or can be a liability. That's what I'm trying to say. Because money by itself, what most of us are thinking, for example, this ringgits, USD, SGD, whatever currencies that you're holding, that's the right word, currency. It's not money.
Right.
So that the cash that you are holding on to itself, it's not an asset. A lot of people thinking that I have 50,000 ringgit, that is an asset, but actually it's not an asset. So this is where people need to understand the difference between money, real money, and currency. All that, what are the things that we are on a daily life that we are transacting, ringgits, are actually currency. So if you look at the word currency, what does that mean? It is current. So it needs to be flowing. It needs to go on a velocity. So when your money stops moving or you keep it in your saving account, so the velocity drops. So that's when it becomes a liability.
Right.
So when we talk about real money, what does that mean? Real money means anything that has a intrinsic value.
Right.
Must have a value. So when we look at the word money, or you go back and study history, what is real money? Back then, the real money was gold, because it has its value, and there are a lot of properties that will determine something that we can call it as a money. Before gold, there was literally a barter system. So this is why we need to study the history. So barter system is there anything that the society believes. For example, this bottle, if tomorrow, for example, 80% of the population or 90% of the population believes that this is money, then it will become money. We will be transacting with this. So there are few properties that we need to see to call it as a money. For example, portability, can you carry around? Durability, will it last? And then divisibility, can you divide it? And most importantly, scarcity, it needs to be scarce. For example, I call this money, but you have 1,000 of this.
Right.
So there's no limited supply, so it goes down in value. So supply and demand.
Right.
So the currencies that we are holding right now, for example, ringgit, MYR, do you know how much is it available outside, and is there any limited cap for it? Not at all.
No, no. Right.
and
Yeah.
and the study shows, especially last year 2020, they have printed 40% of the entire circulation in the history of USD. In the history
Okay.
of USD creation, this I'm not
Mm-hmm.
sure, 1960s or 70s,
Right.
40% of the circulation right now of USD created last year, by just
Right.
last year, in the
Right.
name of QE, quantitative easing or money printing. Because
Mm.
when a crisis happen,
Mm.
all they gotta do is to how do they manage the flow of money, the velocity of money, as I said, is through printing money and
Right.
also interest rate. This is how they play with it. So they will
Okay.
either decrease the interest rate or increase the interest rate, or they print money. So whenever
Right.
when there is a crisis, all they know, what are the easiest solution that they come up with, the federal or the government, is to print money.
Right.
So that's why people need to first understand what is currency, what is money. If they really
Mm.
understand that by studying the history, then they will
Mm-hmm.
know how to make decisions throughout our life. So that is one
Right.
of the example, cash. Another
Mm.
major example will be buying a car,
Right.
for example. So when you buy
Mm.
a car, what happens? It becomes a liability because you have to spend for it, petrol, monthly installment, and so on.
Mm.
Another famous or most common mistakes, I would say, from financial perspective, is to buy first house for own stay. Because
Mm.
traditionally, especially in our community, we've been taught, or we've been practicing, if you want to get married, then you need to have house first.
Mm.
So that's the key difference between someone getting rich or getting wealthy, or someone
Mm-hmm.
staying the same. So if your goal is to really create true wealth, financial freedom, then you should
Mm-hmm.
be putting your money, you should be focusing on accumulating assets instead of liability.
Right.
So when you buy your first house for own stay, that becomes a
Mm-hmm.
liability because you're paying installment, maintenance, water bills, blah 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 blah. But
Right.
if you buy that house for investment, you are renting out, you are selling in 5 years and all that, you are making money. So that's the key difference between the rich and the poor.
Mm.
So these are the
Okay.
examples.
Right. Okay, before we move on, I would like to just remind our viewers that this is currently live on YouTube and Facebook. So if you do have any questions or comments, please feel free to do so, and I can actually share and project your thoughts or questions onto the screen. Okay, so to summarize that part, right? Yeah, car is a liability, house is a liability if you are not, I mean, if you're buying it for yourself, and money is a liability because the value will decrease due to all the money printing because of the inflation, correct? And
Yeah.
when you put it in fixed deposit, the interest rate that you're gaining, right, it is not enough to overcome the depreciating value of the money. Am I correct?
Yes, not to even overcome, to even protect the value of it.
Okay,
It's not enough at all.
right.
So that's the reason
Okay,
why we need to invest our money.
right.
First thing, to at least protect the value that you have instead of
Yes.
keeping cash.
Okay. And I think moving on to the investment part, I think a lot of us have only just started because I think there's the whole investment thing is such a buzzword now. A lot of people have started investing. A lot of people have started putting effort to learn more about investing because I think majority of us already know that saving is not going to take us too far in terms of building wealth. But a lot of us tend to just put it in this equity companies or like fund supermarket kind of website, or I think very famous these days, you always hear this ad is stash away. So what is your opinion on investing your money in those kind of portals?
Okay, before I go on and share with you my perspective or opinion, we just make a
Right.
small disclaimer that whatever that we
Okay.
are sharing or I'm sharing is not an
Right.
investment advice. It's not a
Mm-hmm.
financial advice, only for information purpose. All right. So this is based on my opinion and my perspective of how I see it.
Mm.
All right.
Right.
So
Okay.
so the investment that you were talking about, mutual
Mm.
funds, fund
Mm-hmm.
supermarket, all this.
Right.
Um, so how I see it is as fake assets, because when I understand when I truly understand what is asset and liability, so go back to the definition. Asset brings money to your pocket, liability takes money out of your pocket. So
Correct.
these so-called mainstream or common investments, it actually, if you really see it, it becomes a liability on an
Okay.
immediate term. Because, for
Mm,
example, when you take a mutual fund plan, you're paying
mm,
monthly. It takes money out of
mm-hmm.
your pocket,
Right.
right? Or let's talk about EPF, or
Mm,
let's talk about pension funds, or any
mm,
so-called savings plan and all that. I call it as a fake assets because it takes money
okay.
from your pocket. So you need
Okay.
to really understand asset and liability, then you can really identify which are fake assets and which are real assets. So fake asset,
Mm,
I'm labeling it as a fake asset because I do not see it as fulfilling my purpose of investing. My purpose
mm,
of investing is to give me freedom. So
okay.
when I investing in something, I need freedom from it. I need to make capital gain. I need to see real
Mm,
money behind it.
okay.
If it doesn't serve my purpose or fulfill my purpose, I will not see it as an investment.
Mm,
So these so-called EPF mutual funds, ETFs, and all that. Usually, it will okay. Let's talk about mutual funds, lah. Usually, what
mm-hmm.
will happen is that you'll be contributing monthly. You'll be
Mm-hmm.
contributing monthly plans, 200, 300, and all that. Most of the time, it will be on a long-term period. We are talking about 10
Okay.
years, 20 years for you to really see a result or a profit out of it.
Right.
But people overlook that it also has huge fees. So for
Mm,
example, think about it. The capital that you are putting is 100% yours. The risk
right.
that you are taking is also 100%, but the return that you
Mm-hmm.
are getting is less than 100%. It's going to be 50% or 40%,
Right.
because it will be the it will be deducted for the commissions, the management fees, the switching fees, all these
Mm-hmm.
kind of things. This is how the rich
Mm,
actually rob the middle class and the poor people, because they
right.
because these are all products of the government, the banks, and so on, and
Mm,
corporations. It's not, I will not consider it as real assets. So
right.
for me, what do I believe in, what do I say or give an example of real assets are tangible ones, really has
Mm,
value. For example, real
right.
estate. You
Okay.
investing in a house
Mm,
is something that has huge value and you can really make real
okay.
money. Real
Mm,
estate. We are talking about precious metal, gold, silver. We are talking about investing in business.
mm,
Or we are talking about investing in stock by itself, not through
mm,
mutual fund, not through ETF, because what these guys are doing, you are giving money to them. They are managing the funds on behalf of you. So when they do that,
mm,
they're gonna charge you.
okay.
So what I'm trying to say, you directly invest in stock.
Mm,
So that's how you
okay.
really make the real money. And
Right.
cryptocurrencies, these are all real assets that I will put my money in
Right.
order to attain true wealth, sustainable wealth.
Okay. So, okay, let's say, I mean, we have different people have different mindset. They have different plans in regards to their money and how they want to plan their financial uh, liabilities and things like that. So, would you then say that, okay, for people who are just hoarding the money now in the banks, putting it in fixed deposit, right? The least they could do right now is at least to put it in this investment portfolios so that at least it gives you a higher return than the fixed deposit. But still, this is still for long term, probably for retirement or something like that. The return is very, very small. The return is not yours 100%. And you're not going to gain that much of,
To be
a
honest,
capital
you
gain.
are not gonna go anywhere.
Right, exactly.
Because
It's just,
I always ask
yeah,
these two questions to my audience
mm,
or to even my clients and all that. I ask two questions:
right.
who invests in it? These
Okay.
common mainstream investments out there, who invests in it? Do you
Mm-hmm.
see rich people invest in it,
Okay.
or do you see people who are average people investing in it?
Mm,
People who are poor or the middle class, who invest in it? That's the first question. The rich does not invest in mutual funds.
okay.
At
Okay.
least the rich that I know, they invest in real
Okay.
assets. They either start a
Okay.
business or they invest with
Mm-hmm.
private fund managers, or they'll be
Okay.
investing in real estate and so
Mm-hmm.
on. That's the first question. Who invests in it? You can just reflect by yourself.
Right.
Second, does anyone attain true financial freedom by investing in those? Does anyone retire in 5 years by investing in those, or even 10 years?
Definitely not.
No, because that's gonna keep you working. These mainstream investments are are basically, as I said, products of banks, governments, and all that to actually keep you working. They make you feel like you are investing, but actually you are not investing. If you are really investing, you should be directly investing in assets, not through these intermediaries.
Right.
So they give you an illusion, a hope of putting the money over there and wait for retirement, which is 30 years later. And by the time you get that amount, 200,000, 500,000 at the age of 60, you count in inflation.
Yeah.
You count in inflation. So I will not call it as financial freedom. And do you see anyone happily retire at 60 years old? Or do you see people who continue to work at 60 years old? So these are all reality checks that I'm giving.
Right.
I believe that many will not agree or will come across this as controversial. I'm bashing and all that,
Right.
but I'm just challenging your perspective. Because we've been to go school to get a job and then invest in these mainstream investments, and then buy a house to stay, buy a car, work, retire at 60.
Right.
This is the common way. So to put it in one word, one sentence, average investments, average result.
Okay. Okay, I have a question here from Priya. I think it kind of resonates with what I wanted to ask next actually. So what she asked is, when you say investing in mutual fund is a liability because you need to take out money from your pocket. But when you say investing in real assets, stocks, those are actual assets. But wouldn't you take out money from your pocket too to invest in those?
Okay, for example, real estate. Of course, you need to pay down payment for it, and there is an initial cost involved. But you are getting return from it immediately. You buy a house, you rent it out, you're making money already. And you're going to sell in 5 years. When you invest in a house, you are not going to hold onto that particular house for 10 years or 15 years. Doesn't work. People that I know, they flip the house, they sell back the house in 5 years, 6 years, and they make money on its immediate term. And besides stocks, same thing. You're going to invest. Of course, you're taking money out of it, and you're getting return from it in an immediate term. As compared to EPF, you're saving, you're taking money. It's taking money out of your pocket for 60 years, 40 years, and it does not give you the actual return that will be helpful for you or valuable for you.
Okay, so I hope that answers your question, Priya. Right. So I think I would just like to add on to what Mr. Linkesh is saying. Now, it is a really good opportunity for you to really, think about your perspectives of how you're going to live your life. Now, not saying that 9 to 5 job is not good. It may be your passion. It may be your calling to do your 9 to 5 job. It may be something that you really enjoy. But if what you want and if you feel that is not enough and you want to do more and you feel like you need more, then these are some of the options that we can consider. That's what we're trying to do here, right? So when it comes to investing in real assets, could you elaborate more on what are the real assets that we can invest
on? The most favorite, or the common one that the first one that I would recommend everybody out there to invest in is real estate, because you get to leverage. Think about it, a property that costs 400,000, 500,000, you don't need to put 400,000 to acquire an asset. You basically leverage, which means you use other people's money. You get loan from the bank.
Right.
So you basically acquire an asset with least cost or least down payment. And especially right now, you don't even have to put down payment because a lot of projects out there are on rebates and so on.
Correct.
So this will be a good time to actually look or shop for real estate. So that's the first one I would say. And second one would be precious metals, especially during crises like this where there is a lot of uncertainty. You never know what's going to happen, black swan event and so on.
Right.
When there is uncertainty, unknown in the market, it is good for you to hodl or hold on to real money, which really has value for it, such as gold, silvers, and all that. And recently, I think as of today, right now, gold price is very cheap right now. I think about
Okay.
220 around that. So it's a good time for you to actually buy gold, which has a sustainable value for a long period of time. But as opposed to you holding fiat currencies, it's going to go down in value because of inflation, this never ending printing money. You're going to lose its
Yep.
value. So
Correct.
I would say that's why I would ask you to invest in real assets. So gold, silver, these are the things. And another good one will be cryptocurrencies. And of course, to learn cryptocurrency is something new. It's just been about 10, 11 years in the world. But it can also be complicated because it gives you a completely new perspective because it's on technology based. So
Right.
but it can also, Bitcoin, like a lot of people might have heard this,
Yeah.
which can also become a real money because a lot of people, it is arguable that Bitcoin is better than gold because of its scarcity and it
Right.
suits all the properties of what it takes to be a money. So cryptocurrencies, investing in Bitcoin, for example. So these are the things that I'm talking about as real asset, or even go start a business or investing in a business, or you can also look for options to invest with a fund manager. I know that it may not be available for everyone out there, but this
Right.
really depends on your resources that you have, contacts or networks that you have, whereby you
Correct.
can invest with a fund manager or a trader. So you give your lump sum of money to them, any amount, they'll be managing the fund on behalf of you directly. For example, they
Right.
could be trading in equities, in index funds, and so on, as compared to you giving your money to big corporations, because they're gonna makan you a lot. They're gonna eat up all the most of your returns in the name of fees.
Right.
So
So
these are the
basically, you're
one.
saying that. So basically, you're saying the fund manager, in terms of fees, will be much more lower and negligible compared to these companies.
Private fund managers. There are a lot of traders and fund managers out there. So of course, it depends on who you know, resources, and the
Okay.
network that you have.
Right. Okay. Okay. There's another question as well. I think I would show this question, and then I have a follow-up question to that. So, Vimal Aurea Angela is asking if you could advise on how students with the little savings that they have, they can start planning on their financial journey, which is great because I think a lot of us are like, 30s and mid-30s, and we are still kind of lost. And I would say the best way to start would be, in the early 20s, but they would have little to no savings at that point because, they've only just started working. So how do you think they should start their financial journey?
To be honest,
Mm-hmm.
what I will recommend, or what I will do if I were you at the age of
Right.
20 or 19, I will not be eagerly wanting to invest my money into assets. I will give priority to learn as much as I can. Or in another word, investing in myself,
Right. Okay.
especially knowledge, because we are living in information age. Right now, if you see, things are trading based off information. So if you have the right information, that will make you rich. Or if you are misinformation will also make you poor. So the one thing that I would really suggest, especially for students out there, is to not invest yet, but to invest in yourself. First thing first, knowledge, to learn as much as possible. And especially right now, as I said, we are living in information age. There's thing called YouTube. There's a lot of teachers out there in the YouTube as compared to your college or universities. Real teachers I'm talking about. So first, educating yourself on finance. And the second one would be acquiring skill sets. So this may also cost money. For example, for you to learn any particular skill set, or for you to even learn finance, or to, for example, investing in real estate, or investing in stock market. There are also
Right.
courses out there that you can subscribe to learn. So these are all to actually make yourself as a valuable person. Besides that, besides investing in yourself, what are the results that it will give you is your ability to earn, because you are the greatest asset that you can ever be compared to any other assets that you're going to invest outside. You yourself, your brain, your knowledge is the greatest asset for a lifetime. So I will prioritize on learning and investing in myself. So these are things. Besides that, being healthy, eating healthy, all these things people overlook. People really overlook on investing in themselves. So that would be my advice. So besides that, assuming you are doing all of those, then with the little savings that you have, but if as students, for example, you have 500,000 ringgit, what I would advise you is that to accumulate more money actually, because
Okay.
with 500,000 ringgit you can't really do much with it, because the more capital or the bigger capital that you have, the more options that you will have to invest in.
Okay.
So that's why I will ask them to focus on earnings, building up their skill sets, starting a business, all these kind of things, which will eventually will cost money, small monies that they will have to not run. But I would not suggest them to rush into investing with any other assets, or investing with people, trading, putting your money in, might end up in scams and all that, students. So that's why always invest in yourself first and foremost.
Okay. So basically, invest in yourself, gain as much financial literacy as possible while earning and basically building your capital for your next step. Is that right?
Yep. Yep.
Okay. All right. Okay. All right. So there's another question. This is in regards to the earlier one, in regards to how you said investing in property is much better than putting money in that fund companies, right? But what she's trying to argue here is the fact that when you talk about down payment, the loan that you're going to commit, stamp fees, insurance, wouldn't this also considered to be like the sales charge when you put the money in fund supplement, for example?
Okay, she's comparing down payment loan, which are the committing stamp fees. These are all fees that require in the process of acquiring an asset. As I
Right.
said, those real estate is actually a real asset as compared to mutual funds.
Mm,
Because mutual funds, you are contributing on a monthly basis most of the
mm,
time, especially if you're investing with an agent, insurance agent, or mutual fund agents. That will be on a
mm-hmm.
monthly contribution. It's taking money out of the pocket. As compared to real
Yeah.
estate, of course there are initial costs, and especially, but if you really look at it right now, the cost that involved to acquire a house is very, very little as compared to 5 years back,
Mm,
right? So after those initial costs of acquiring a real estate, you will be able to rent it out. So again, it requires knowledge for in order for you to learn how does real estate investing in real estate works.
mm,
You should be avoiding mistakes, I would say. So first, be keen to learn how does real estate works. How do people really make money in real estate? How do you buy a good property? What are the
mm.
criteria that you need to look at? So there's a lot of information out there. There's a lot of legit mentors or coaches out there for you to teach how to really make money out of real estate, how to not mistake, especially. So again, comes down to your knowledge. So if you have that knowledge of really investing in real estate, then you will be really making a lot of money.
Right. I think when it comes to anything that involves money, it's always important to be informed onto where are you going to put the money in first. So, when it comes to real estate, I guess you'd have to learn what is the current market trend is, how is the price is dropping, where is the best place for people to even would rent the house, because there's no point if you buy a house and then you end up paying with the down payment because you couldn't find tenants. Am I right?
Yeah. So you
Okay.
become an investor by yourself if you really choose to invest in real estate. As compared to
Mm,
investing in mutual fund, you are not an investor. You're giving money to someone or a company, and
mm,
they are the one investing with your money.
correct.
And the returns that they are giving is it doesn't mean anything. 9% per
Mm,
annum, 8% per annum. on a 10 years, 20 years scale actually doesn't mean anything.
Right. So there's this question about, okay, so where do I learn this real estate knowledge? So I would think that you just answered that question, right? You can find mentors or tutors on that. Where else do we have like a proper courses that we can take? Are there such things?
Okay, you can either learn by experience,
Mm-hmm.
by your own experience, making mistake and all that. So of
Right.
course, if it's a costly mistake, then you don't want to make it, you see. Or
Yeah.
another way, you can learn from other people's mistake. So again, these are all I'm sharing based on my experience. You can learn from other people's mistake. Maybe your uncle made, your father made a mistake or what. And the third
Right.
thing is to learn from online. You can simply Google how to invest in real estate in Malaysia. I'm sure there's a lot of resources. So this is the third
Right.
thing. And the fourth thing, to get a coach or to get a mentor. There's to name a few, the mentors that I work with, Faizul Rizwan. So he's a Malay guy who's doing really good in real estate.
Mm-hmm.
You could be learning knowledge for free. He has a private group in Facebook as well. If I'm not mistaken, Faizul Rizwan private group, something like that. It's a free group in Facebook. You can go inside and learn a lot of stuff on investing in real estate. So as such, there are a lot of mentors out there as well, especially in Chinese community. I mean, it's not really famous, or I don't really see in Indian community anyone doing real estate coaching or mentors on a bigger scale. But from what I see is from other communities, and be willing to learn. And of course, in that scenario, there might be something that you need to invest in order for you to acquire something. So of course, getting a mentor or for you to really have access to their knowledge and education or the projects that they have, you need to invest. I see it as an investment, not something that you are spending. So you need to acquire membership or to become their client. Then you will have exposure. All you need to know about investing in particular real estate. So same applies to stock market. Same applies to cryptocurrency. Cryptocurrency is quite new in Malaysia, but real estate stock shouldn't be a problem for you to find resources to learn or someone who is willing to teach you.
Okay. All right. So I think when it comes to money, right, a lot of people are either very reluctant, like what you said earlier, people are just happy to put it somewhere and just happy to see it accumulate, not knowing that as much as you're seeing it accumulate, the value is actually decreasing day by day. And when it comes to, putting it somewhere, putting it into real investment, a lot of them are very reluctant because then you'll have to put in more effort, need to spend time to learn things, you need to learn, you may, that learning curve could be huge to the point that you may lose some money in the process. So a lot of people don't want to take that risk, but they want to be rich, right? So I guess it comes back to how much you want to do something and how much effort you're willing to put in to achieve certain goals that you are looking at. Because everyone can say they want to be wealthy, they want to achieve financial freedom, but I don't think everyone is ready to take that step to, put that effort, invest in a lot of different things that is new for them, new territory, right? Okay, so in the process of like, earlier the question was like for younger people 19, 20 years old, they still have no money yet. Okay, great. Yeah, the main thing is to put effort into investing themselves, saving up money for capital. Okay, but let's say for people who are mid 30s, okay, they've only just started looking into this because they realize that this saving is not going anywhere, this investment is not going anywhere, I need to do something much more solid. How would you suggest these kind of people to do something? What do you think would be the most viable way for these people, for these kind of people to do something?
So it really depends on them, their goal. Where
Okay.
do they see themselves in 5 years, 10 years, and
Mm-hmm.
where do they want to go? Because investment is a journey by itself. A lot of misconception or a lot of mindset that I see out there, common ones, is that they
Mm-hmm.
have this lump sum money,
Mm-hmm.
they just want to put it somewhere and get return out of it.
Right.
So for example, I have 10,000, so I look for something where I want to just put the 10,000. I don't want to care about it.
Right.
So as much as you are being passive on it, on the things that you do, you are being passive over your money, you don't want to pay attention, you don't want to be actively involved, then what you're going to get, it will also be passive, will
Right.
also be average.
Mm.
So so as I said, really depends where you are heading. So this, what comes to my mind is, if you look at Robert Kiyosaki cash flow quadrant, ESBI. So there's 4 column or 4 types of people in the world. We can call it employee, self-employed, business owner, and investor. So if you really look at it, 90% or 95% population in the world will actually end up in the left column, either being an employee or self-employed.
Right.
What happens is that you will be trading your time and energy for money. So when you do that, you will not have this whatever goals or this definition financial freedom.
Mm.
How do you attain financial freedom or true wealth? Is by jumping onto the right column, either become an investor or become a business owner. Because when you become an investor or business owner, you no longer trade in your time and energy for money.
Right.
Because as an investor, you put your money at work.
Mm.
As a business owner, you have a system, you have people who's using or working on that system that you have created. So you have leverage, other people's time, other people's money, and so on. So it
Right.
really depends. So if you want to stay in that employee quadrant, then you can be passive towards money. Then you can invest in these common investments out there, EPF,
Right.
mutual funds, ETF, and all that. But if you
Yeah.
are really seeking for financial freedom or financial freedom, then you should be looking towards jumping into to become investor or business owner. So a lot of people who are already working, especially in 30s and all that, it will be difficult for you to start a business, because starting a
Yeah.
business by itself is not easy. You need to have knowledge, you need to have capital, you need to put a lot of work at the beginning. So I would say it's much more possible or easier for you to become an investor.
Right.
What all you have to do is to just all you have to do is to study, to educate
Okay.
yourself on that particular investment asset that you prefer. You can
Okay.
choose, for example, you can decide to learn stock market, how to invest in shares, or
Okay.
you can decide to become a trader, whereby
Okay.
you learn how to trade, or you can decide to become a property investor. You pick an asset classes that you want to learn and dedicate your time, put in your energy and all that to learn. And throughout the journey, you'll be also making money out of that asset classes.
Right. Okay. So we just have to make sure you pick what that is calling out to you in terms of, how practical is it in terms of time, because you see you can also trade in stock, but I think stock will take a lot of your time. Am I right? You need to take because you really have to study the market, because the market is very volatile. So basically it depends on your personal preference, but you fix on that, learn as much as you can on that, and then just try to invest in that one niche.
Yeah,
Correct?
everyone starts somewhere.
Right.
Everyone starts somewhere. I started from zero as well. I have no financial knowledge.
Mm.
It takes time. So instead of just working and complaining and all that, constantly not taking action, you just have to start somewhere. So
Right.
start by making a decision today where
Okay.
you want to be. Do you see yourself in an employee quadrant for rest of your rest of your life, or you have desires, or you are willing to strive to become an
Correct.
investor or to
Right.
become a business owner?
Okay. Okay. Um. Oh yeah, I think actually this is a good question. I also wanted to ask that. So you told earlier that you want to invest, when it comes to investment, it's good to invest in precious metals, right? But these days, bank also have this whole gold investment plan where we don't see the gold, right? But we so-called buy a gram, we buy 2 grams, and then we put it there, right? Is it the same, or is there like some issues with those kind of investment?
If you want it to be really safe, if I were you, personally me, I'll be acquiring physical gold.
Okay.
Investing in gold, there's a lot of ways that you can have an exposure to invest in gold. For example, the basic way or the safest way to acquire physical gold, or you can also trade gold. which you don't, I mean, you basically trade with leverage or with margin liquidity.
Okay.
You don't physically own the gold, but you own on numbers and digits. So you
Right.
buy
Right.
and sell on short period of time. So for
Right.
example, right now gold per pound is, for example, 1,007. So I buy right now, I trade, I buy, I click buy. So it goes to 2,000, I sell, I make profit immediately. So that
Right.
is on liquid market. Or you can also buy gold digitally.
Mm.
There's an app called Hello Gold,
Mhm.
which is in Malaysia, registered and licensed, whereby you don't own that physical gold, but you are buying through that app. But the only, excuse me, only cons that I see is that they have fees, so-called fees. So I don't want to pay those fees. I would rather either I will trade in gold or I will acquire physical gold.
Not this bank gold investment plan.
Yeah, they will usually have fees and all that. So I try as much as possible to avoid those.
Mm. Okay. Okay, just another question. So for someone who has a 9 to 5 job, how much time should we ideally invest to make sensible returns? So I'm assuming this is okay. Let's take this question into two parts. Maybe if we were talking about stocks. Okay, let's
Mhm.
say we want to trade stocks and we have 9 to 5 jobs. So how much time do we have to spend to have sensible returns, or is that is like a useless thing to even think about if you are having a 9 to 5 job?
For me personally, I do not believe in managing time.
Okay,
I create time based on my priority.
right. Okay,
I really believe in creating time because we all have 24 hours. So if it's a
right.
priority for you, create as much time as possible to
Mhm.
how much priority is that for you.
Okay.
So there's no fixed formula or there's no recipe that, oh, you should be allocating 5 hours a week, then you'll be a successful stock trader
Mm.
in 2 months. There's no such
Right.
thing. So
Right.
it really depends on how fast can you learn, these
Mhm.
are these factors, and how valuable, how what type of exposure do you have. Are you learning quality information or some surface level kind of stuff? There's a lot of factors in it, so I can't really exactly tell you how much time you should be allocating.
Mm-mm-mm. Okay.
Usually
All
if you are
right.
working, let's say on the weekends, you allocate your time to learn uh, something.
Okay. Right. All right. Okay. So, um, oh yeah, this is another question I think people want to know as well. So let's say we are, investing in stocks or investing in all these real estates. Would I have to pay taxes for this, for the returns?
Investing in real estate, yes, you need to pay tax. So it depends. It has the number of years that you are, which year are you selling, and
Mm-hmm.
and a percentage according to that year.
Okay.
So you can just Google and you can find out. So if I'm not mistaken, if you sell after 5 years, it's about 5% on the capital
Mm.
gain you need to pay.
Right.
First three
Okay.
years is about 25%. So I'm not sure exact figures. So
Mm-hmm.
for real
Mm-hmm.
estate, yes. For stock, you don't have to pay tax as of right now
Right.
for the gains that you make on stock.
Mm. Okay. And okay, I don't know if this could be a question that can be answered, or it is basically change. I mean, it changes depending on people. But a lot of people
Mhm.
tend to not do things because, like what you said in the beginning of the show, which is having emotional connection with the money. The point
Yeah.
that they're very, very scared to do something totally different or totally outside of their comfort zone. So how would you advise these people? How do they see the money objectively so that they know that, okay, whatever that I'm doing will have some sort of return, and try to have that, a bit of courage to do something different?
Okay. To be frank, I'll ask them to study what
Mm,
is money, study the history. So if they
right.
really understand what is money and what is currency, as I said previously, if they really study the history, if they
Mm-hmm.
really study how does the current financial uh, system works, then they'll have a knowledge, they'll have a conviction of what it is, and they will also know what to do next.
Right.
So they do not understand, they do not know what is money, they do not know how does the current financial system works, they do not understand basic economics. So that's the reason why lack of knowledge,
Mm-hmm.
lack of education, that's the reason why they are holding on to the currencies and they are not willing to invest. So if you really understand, then you will be getting rid of it, because you know that
Right.
it's going down in value and so on. And
Mm-mm-mm.
another thing is that people are being reluctant to invest, being reluctant
Yes.
to take the risk. So of course you need to, it depends on your age, depends on your financial background. But on top of that, generally we are being taught, we are being programmed or being taught, we are being raised to not fail in life.
Yes.
So it starts with school. You shouldn't fail. So
Mm.
we've been taught to always pass, to not fail, to not fail back. So that's the one leads you to not invest your money, not willing to lose, not willing to take risks, because you are afraid of losing. You're afraid
Yeah.
of failing. So in life, as we all know, you need to fail. You need to fall down in life in order to go back up. What goes down must come up.
Yep.
The more bottom it hits, the more
Mm-hmm.
top or higher level you will go. So this is general, right? So
Mm-hmm.
that's another thing. So it depends on your risk appetite. So of course, if you are younger,
Yeah.
if you're in 20s and all that, you should be willing to take as much risk as possible, because you got nothing to lose as compared to you in 30s, as compared to you having families, commitments and all that.
Yeah.
So it depends on your lifestyle, depends on your financial background. And besides
Mm.
that, you can also take calculated risk or
Mm.
proper risk management.
Right.
So this is where diversification comes in.
Mm.
So you have 100,000. How do you diversify your portfolio? So you can diversify maybe 20% of it high risk, 30% is it medium risk, 50% low risk. So from
Mm-hmm.
low risk, medium risk, high risk, you can decide where you should be investing. So for example, on a lower risk, you could be buying gold, silver, very low risk.
Right.
On a medium risk, you could be investing in stock or whatsoever that you see. So
Okay.
there's a lot of perspective that I can give when it comes to risk. Another
Mm-hmm.
perspective is risk comes from not knowing.
Mm.
So
Mm.
if I tell you to invest in cryptocurrency, Bitcoin, if you were to blindly invest in it, you will see it as very risky, because you don't
Yeah.
understand it. You do not know how it works. So you
Right.
tend to be, you will not put any money. You will put a least amount of money because it's risky. As
Mm.
compared to me, I really understand it. I have conviction towards it,
Mm-hmm.
and I don't see it as risky. So
Right.
I could be investing more than you. So
Okay.
there's a lot of perspectives.
Right.
So yeah, again, saving money is that your money is being in comfort zone. Your money is
Mm-hmm.
so comfortable. Same goes to you. If you're very comfortable, you wouldn't be growing. You need to
Mm.
step out of your comfort zone. So
Right.
investing your money is similarly you stepping out of your comfort zone, seeking exposure, venturing into things and all that. So be willing to invest,
Right.
and also knows the you should be knowing and educated enough the importance of investing your money.
Mm. Okay. Right. So when it comes to okay, I saw this question and I lost my train of thought because this is an interesting question. So I'm going to show this question first.
Mhm.
Um, okay. Okay, I think this is a very interesting thing because this is what a lot of people would have in their mindset when they want to buy a house, right? Excuse me. So she understands that buying a house is a liability.
Mhm.
But again, if I'm renting, instead, I'm still taking out money from my pocket, but giving it to someone else, meaning being a tenant, right? So compared to that, I would rather pay monthly for an installment of a home that is going to be mine. So what is your point of view in this?
So there's a famous saying by Grant Cardone: rent to stay, buy to rent. So what he mean is that you should be buying house to rent it out, and you should be renting house to stay. Why? Because when you buy a house and rent it out, it brings money to your pocket. So
Mhm.
what she is looking at is on the only on the one spectrum of investing in real estate, which is generating cash flow by renting out.
Mhm.
Okay, so I give you this by an example. So let's say you buy a house. Let's say your installment is 2,000,
Right.
and let's say you're renting out for 1,005. So right now you have a negative cash flow from your pocket 500.
Mhm.
That's all. As compared to you buying that same house, staying in that same house, you are now forking out 2,000 installment. Besides that, you are paying the water bill, utilities, maintenance, and so on. So that will be a negative cash flow, money going out from your pocket, higher amount, lower amount. So this is just one spectrum. Second spectrum of investing in real estate, capital gain. That's where you make real money. So
Okay.
if you buy that house and renting out to people, you should be selling it, because when you buy a house, you should know when are you going to sell. You should have an exit strategy. This is another mistake that I see a lot of people make. They just simply buy a house and so called for investment, but they have no idea when to sell, how much to sell. It simply means going in a game and do not have an exit strategy of coming out, because you make money when you sell, you don't make money when you buy.
Right.
So again, when you're renting out to people, you can easily sell in 5 years or 6 years when it goes up in value. As compared
Right.
to you staying in that house, it becomes a liability forever, because you can't sell that house, isn't it? In 5 years, the price goes up, you can't sell because you are staying in that house.
Right.
So what I'm not saying that it's totally wrong or you shouldn't buy a house for own stay. I'm not saying that. Of course, traditional belief, our parents and all that, you should have a house, should be staying in your own house and so on. What I'm trying to say, your first move should be accumulating asset, see it as an asset. Your first move is to acquire asset, not liability. These small changes, trick will make huge impact in your life, in your financial statement. You first acquiring asset and compared to you first acquiring liability will make huge difference in your financial journey. So
Okay.
again, I'm not saying it's strong for you to stay in your own house later. So for me, right now, I'm investing in a house and I'm renting out. Does not mean that I will do this forever. On my third house, fourth property, once I made a lot of money, once I made good amount of money, then I can simply buy a house and stay in my own house.
Okay. So I think
Yeah.
another thing that she's trying to say is like right now, you just said that you are buying a house and you're renting it out, right? So
Mm-hmm.
you're getting income from that rent. But at the same
Mm-hmm.
time, you are, for you to stay, you are renting someone else's house.
Mm-hmm.
Okay. So you are forking out money for that as well. So you also
Mm-hmm.
need to make sure that there's going to be a positive cash flow, right, between your income and how much you're forking out for your rent.
Mm-hmm.
Am I right?
Yes. So this is another example. So as compared to you staying with your parents, then that will be a huge advantage for you.
Of course.
If let's say you are not staying with your parents, let's say you are renting by yourself at any place. So of course there you are generating income, passive, and here you are still paying for rent.
Yes.
In that scenario, yes. But again, as I said, the real money, the real profit when you make is when you sell that house. But if
Right.
you're staying in that house, you can't make money.
Mm.
That's a that's a big difference.
Right. Yeah, because this is a very interesting question, Angela, because that's something that I always hear. Like, oh, why would I want to pay rent to someone else when I could pay the installment for a house of my own, which is great if
Yeah,
that is your plan. But
yeah.
if your plan is to become richer, then you probably want to own a house on your third attempt, perhaps. And the first, second, probably you just want to buy and sell in 5 years, buy and sell in 5 years.
So
Am I
this is
correct?
on fundamental perspective. Yes. On
Mm.
a technical perspective, there's even
Mm.
more cons if you buy your first house for stay,
Right.
because when you buy your first house to stay, you are stagnant. You can no longer. It will be hard, very hard for you to acquire second or third property
Okay.
as
Why is
compared to
that?
me,
Okay.
because when you buy a house, you're acquiring loan from the bank.
Okay.
Okay, so when you buy your first house and you're staying in your house, it becomes a big liability. As I said, it will
Mm.
have huge negative cash flow, right?
Mm.
So in that scenario, your debt service ratio, your income is stagnant most part. Your income is
Right.
not going to jump 2,000, 3,000. So your income is 3, 4,000, for example, and you buy a house for own stay. Now you have a negative cash flow. You can no longer expand, and it will be very hard for you to acquire second loan.
Mm.
As compared to me buying first house for investment, I can declare my rental income.
Right.
I can declare my rental income. It will be much easier for me to acquire second house for investment and third house maybe for own stay.
Right. Okay.
Yes. So that was the technical part.
Okay. So as somebody who is like in the mid-30s and who is only now saving money to buy their first house, you would suggest still not to own it yet, to invest in it.
So it depends on their financial goal. If you're
Right.
already making money somewhere else, for example, they have a business, they have invested in stock, crypto, they're already making money somewhere else, they are quite happy, then they can go ahead buy a house for own stay. But for
Right.
someone who's starting out from scratch, you should be acquiring house for as an asset.
Okay.
Because
Okay.
your focus should be to make money first.
Mm.
If that's your priority,
Okay.
that's the that's a
I guess it
somebody like
depends on
what's your
what people
priority?
think. Some people will be like so mind blown by listening to this. Like, what if I don't want any of this? What if I just want to have a house and settle down my family, which is great. You can do
Which is
that.
great, as long
Yeah.
you don't complain.
Okay. Yeah, that's true.
People complain later on.
Yeah. Yep. Correct.
Either they complain or they give up.
Mm.
So
And they
they stick
settle.
and accept the life that they have. Oh, that's it. This is
Mm.
my life. So for me,
Yeah.
I'm striving. I have desires. I have financial. I have goals and all that. So that's why I'm
Mm.
making these moves. And of course, I believe everyone should be should be going towards that goal, because the biggest asset that you have is freedom.
Mm-hmm,
So
mm-hmm.
when you're not making money, you're trading your freedom.
Okay. That's true. Okay, I think I would go for one last question because cryptocurrency is a very hot topic, right? And a lot of
Mm.
people would want to learn more about that. And I'm not going to ask question about what is cryptocurrency, what is that, how do we? Because I think that will take another whole episode. And I think you would suggest that you do your own informed decision by making your own research about it. But there is a question here that says, um, how do you say crypto is low risk? It is very volatile and mining leads to environmental issues.
Environmental risk issue could be, I would say, it's a lot of news and all that to actually dissect people's or to actually bring the value down. So let's not talk
Right.
about environmental issue. So on the volatility, yes, of course, cryptocurrency is volatile because it's relatively new.
Mm-hmm.
But as the years goes by, cryptocurrency was started 2008 or 2009. So as the years goes by, it has been proving its technology and its value case and its use case, and
Mm-hmm.
people are adopting as compared to 5 years back.
Right.
So as every year, Bitcoin, for example, or cryptocurrency is surviving, the volatility actually goes down, because you
Right.
see right now big corporations are are allocating their treasuries in Bitcoin. Recently, Tesla, Microsoft, Square, and so on. So when there is a mass adoption, especially in top companies or corporations, the volatility actually goes down. So in order for you to make money again, so it depends on what's the approach. If you are speculating, gambling, high chances you will lose money, because
Right.
you react based on your emotion. You see your
Mm.
friends buy, you go and buy, and then you see the price goes down, and then you go and sell. So that's what caused volatility. But as compared to 5 years, 10 years back, the volatility is actually much more better right now, because
Right.
people were initially speculating. So that's why it caused volatility. But a true investor have conviction over Bitcoin or cryptocurrency. They know how it works. They believe in it. They see the future in it. They see the value in it. They will not be fooled, or they will not be losing money in volatility. They'll be holding
Mm.
on to it.
Mm. Because I
So
think a lot of people they get scared the moment the money goes down, the value goes down,
yes,
and then they feel like, okay, I rather sell now rather than waiting for it to lose
blah
even
blah.
more, and then they
Market
end up
psychology.
Right. And then they
Yes.
end up
So
losing a
that's
lot
how
of
the
money.
market cycle. Same thing happened in stock market.
Right.
Same thing happened in
Yeah.
real estate. So there's market cycle,
Mm-hmm.
buyers market, sellers market, bear and bull. So you have to
Right.
really understand in it and so on.
Mm.
But even though out of all the volatility that it happens throughout the history, if you really look at it, every year Bitcoin price is going. On a
Mm.
short term, there is volatility. On a bigger
Right.
time frame, the volatility is very less. It's only going up. It's only going up if you look at the 10 years time frame, 10
Mm.
years chart. But if you look at it at a 1 day chart, of course, there is volatility.
Right. Yeah. But yeah, at the end of the day, I think just by listening to, like, 5 minutes about crypto on a show would not be enough for you to learn everything about it. You need to do your own research. And then since you're going to put money into it, you need to believe in it. You need to have conviction in it to,
Yeah, so that's how you will evaluate as risky or low risk. So for me, it's low risk. For him, can
mm,
be risky.
yep,
So low risk
yep,
for me because I understand it, I know how it works, I believe in it.
mm,
So it can be high risk for you if you don't believe in it, if you don't educate yourself on it.
right.
Mm.
Okay. Right. I think in there aren't any question yet. Okay. So I think that was a great way to wrap up, because I did want to ask a bit about cryptocurrency, but then I realized that if you want to talk about crypto, then that's going to take another episode in terms of how it works. And as much as we would be able to give a surface level information as to how it would work and things like that, at the end of the day, it all depends on your conviction whether or not you want to put your money, your life savings into it. So yeah, and I guess that basically kind of wraps up the whole discussion for today. It all comes down to what you want. If you are fine being an employee and retire at 60, great. Do that. Be comfortable with your salary, and if you're comfortable with what you have, it's great. I mean, this is only for people who wants to do more, who feel like they need more, they deserve more, and what they're doing right now is not enough. I think this is a great way for you to start looking at other opportunities to invest. So this
Yep.
was a real eye opener. Thank you so much, Mr. Linkeshwar, for spending an hour with us.
No problem. Thank you for the viewers for tuning in, and thank you for all your questions. I hope there is a clarity. I hope that I challenge people's perspective to look at it on a different spectrum on the whole financial idea and image.
Yeah. So basically, to summarize, um, there's so many ways to play with your money, but I think what you need to do is to think about what you want to do. If you want it to grow in a way that is basically, how to say, the return is equivalent to your effort, right? If you want to put minimal effort, you will get minimal returns. If you want to
Yeah.
put somewhere and you don't want to think about it because I don't want to be just checking my monitor every single day to see how is it going, then you're just going to get a very
Which
minimal, very passive.
which I find quite hilarious because we are living in an economic world. We
Right.
cannot
Okay.
run from money. You are facing with it every day. So what I'm
Yeah.
trying to say, why not pay attention to it, learn it
Yeah.
instead of being ignorant or overlooking finance.
That's true. Because yeah, one thing that is sad is that we don't have enough financial literacy. It is not being taught in schools. Like, till now, it is even to pay your taxes is something where you have to go and find some tutorial to just fill in your forms, which I think it's something everyone needs to know, and yet there's no proper dissemination of information in schools or things like that, which I think is sad. But like I said, like you said, this is an information generation. You can get your information online. Just make sure your sources are legit. Just make sure it is verified, and you can get whatever information that you need. You want to learn the information is at your fingertips. Um, with that, I thank you so much, Mr. Linkesh, and to the viewers. Thank you so much for tuning in. Thank you so much for all the questions. You can watch the whole episode on Beginner Resources YouTube channel and the rest of the episodes as well. And I'll see you guys in 2 weeks. Thank you.
And lastly, I would like to
Mm-hmm.
also add, people can actually follow me on Instagram and my
Yes.
Telegram. Plenty of
Yep.
resources there.
Yep. Correct. Yeah.
Yeah.
I also knew Mr. Linkesh through a podcast that he has as well. You can also find his podcast on Spotify, Millennial Money. Am I right?
Yep.
Okay.
So good night, everyone.
Good night.
All right.